Lean. She's going to be running the show with me solo today. Boris is out doing some other trading type activities, but you've been away for a couple weeks. We've missed you. How are you?
I'm doing well, and I've been away from our Monday talks, but I haven't been away from the markets. And what's really fun, Corey, is that our members know is that I tend to trade best when I'm trading from the beach and on vacation. So last week I was on a cruise, and we did really well. We only traded three
Awesome.
days, but we hit our targets really early, and there's a lot to be said about a more relaxed perspective and taking that approach when trading. It makes a big difference, I think.
Absolutely. I noticed the same thing myself. You get out of the daily grind, you kind of recharge the batteries, reset everything, and and when you come back, you might trade a little better as well. Also,
Yes, but what I'm really talking about is that when you're on vacation, I think at least for myself, I trade better on vacation because I'm much more relaxed. I don't want to be sitting there glued to my computer screen watching the quotes. So I'll only be taking the most selective trades, and I'll put them on and I'll leave. I'll leave and I'll go out, go to the beach,
got it.
and I won't be sitting in front of my computer staring at every pip change. And I think that attitude, regardless whether you're on vacation or not, is something that I think is important for many people to take a note out of because
Is that a habit you think you could bring home from vacation?
I try really, really hard, and I know what the pattern is, but sometimes when you're at your desk, your home office, it's really hard not to watch what's
Right, of
going on in the
course.
markets. And another really interesting thing that I think makes my trading better on vacation is that I'm not following the markets throughout the course of the day like I am while I'm sitting at my trading desk. So and I usually only trade Asia because I don't want to be up at 6 a.m. in the morning on vacation. So I come to it from a very fresh perspective, very focused on my setup and on just the pure data that I can look at, like what numbers came out on the calendar, whether it was good or bad, and not being affected by how my trade went in the morning or some movements in the market. So it comes from more of a fresh approach and not being distracted by market noise. And I think that makes a difference
It
as
sounds like it
well.
does. Kathy, we've had some other guests on the show recently, some trading experts, and a lot of them really rely on trading journals and looking at what works and what doesn't work. And they would surely tell you that you need to have that approach in your journal and take it full time if it's more fruitful.
It is, but and it truly is more fruitful. I mean, which is because my performance is always better on vacation. But as a trader, it's really hard to peel yourself away. And there is some intimacy with watching price action throughout the course of the day. For better or worse, it makes you feel like you truly understand why something happened. And
Right,
if you
right.
imagine what's going on, there's a very big difference between me turning my computer screen on in Asia and looking at the US Empire State Survey that came out this morning, said it was strong, and then understood that the market perceived this to be dollar positive, and maybe I'll carry over to Asia. That's different from sitting there and watching how the dollar was down and then it completely reversed itself, and then it kind of petered out its gains, and that the intimacy of watching that pip to pip flow, I feel like really makes me understand the mentality and the dynamics of the market for better or worse. And
Right.
and I think it's still important.
Good for you. I love it. You love the nitty gritty for sure. So getting away from the charts is probably particularly if you're not on vacation with 100 other things to do, it'd probably be difficult. But I'm glad you had a good vacation. You said you were on a cruise?
Yeah, went on a cruise with my family to Bermuda. It was our first
Awesome.
time, so it was
Cool.
beautiful, crystal clear waters.
Awesome. Very good. Very good. So I know next week's a big week. This week we've had some kind of a change in the tides a little bit with some, the yields falling. We've got some, recession projections revised down. Talk to me a little bit about what's going on in the world.
Yeah, but before I do so, there's a whole bunch of you on Twitter Spaces. So
Oh,
we'll
absolutely. Let's bring
just
them on.
drop in the YouTube link so that we're live. You can watch, Corey and I, talk, and then I'll share my charts here. One second. Watch the live stream. So I'm just pasting this right into the Twitter Spaces, so you should get that in a second. Um,
Perfect.
so yes, this is a
And you
very
guys could ask questions there as well. If you want to put questions in the live stream, we'll answer those questions right out of the YouTube box.
yeah, it hasn't sent. I mean, Twitter is a little slow these days. But what was I going to say? Yes. So last week, the US dollar hit its lowest level in 8 months. And I think it's the worst performing week in 15 months. So bottom line, US dollar doing terribly, and US equity is doing very well. I mean, S&P 500 climbed to a record high last week. And on Friday and today, we're seeing a shift in tide in a sense where dollars rebounding, stocks aren't necessarily pulling back, but the dollar is rebounding, and many investors are wondering if the dollar has bottomed, and B, also wondering whether now is the time to pick a top or bottom, because
Right.
when we get these really overstretched, overbought, oversold moves, it is extraordinarily tempting to pick a top or bottom, especially when you're starting to begin to see you're beginning to see that reversal happen with the US dollar rebounding. So I think it's important to take stock of why is this happening. Last week or in the weeks prior to that, we had a tremendous amount of US dollar weakness because investors are starting to believe that the Federal Reserve is near the end of its tightening cycle, because we had that horrible inflation report where prices came in weaker than expected, and the week before that we had relatively weak jobs number. So the deterioration in data is building up. And this week, the big focus is the U.S. retail sales report. And, I always like to say, Corey, that consumer spending is the backbone of the economy. And it all boils down to what is spending, because spending drives growth. And the forecast is for an uptick in spending. And that's part of the reason why you're seeing the dollar, you're seeing this relief rally in the dollar. You saw that on Friday. You're seeing that today, because investors are thinking, maybe consumer spending isn't all that bad, because overall, even though the labor market numbers were a little terrible, at the end of the day, the labor market is really not all that bad, right? We know the labor market is chugging along, and it's hot, and there's still a lot of spending happening. So there's a hope that the retail sales report is going to be strong. And then this morning we had that really hot, we had the stronger than expected Empire State Survey. It was not really hot. It was just the expectations were so low. The market was expecting the manufacturing index to go from positive to negative. Instead, it remains positive. And so that was the upside surprise. So it still was weaker than the previous month, showing that the manufacturing sector is slowing down, but at least it's not contracting. So investors interpreted that to be good news, and they're setting up the stage for more good news on tomorrow, on Tuesday, when we have the retail sales report. So we're seeing a relief rally. And I think that if you're picking tops and bottoms, it's really important to recognize what is driving this relief rally in the US dollar. It's number one, first of all, the dollar sold off aggressively. So what you're seeing is natural profit taking ahead of a big number. And when we have a big number, there's still going to be uncertainty, right? And if you already made a lot of money selling US dollars, it's probably better to take profits or be flat, or protect yourself from further losses. So as a result, part of that is happening because we've got the retail sales report and investors are squaring up. Secondly, we obviously had that strong Empire State, and so they're kind of like doubling up on their expectations that perhaps the U.S. economy, U.S. data isn't as bad as they fear. And so as a result, this is the signs of a bottom are motivated by things that we don't know yet. And that's what I want to warn our viewers, is that we really don't know if that retail sales report is going to be as good or better than as everyone anticipates. And it can all reverse itself if that number is not strong. And so, that's really, what we're watching out for, which is that we've got, if the number comes out weak, then we've got some trouble ahead of us. We've got the possibility of, that the dollar resuming its slide. So when you pick a top or bottom, one of the biggest mistakes that people make is that they mistake consolidation, or I guess profit taking. They mistake consolidation and profit taking for a true top or bottom. And that is what is happening right now. Unless up until we get that retail sales report, and unless it's truly strong, there is no reason to think that this is a true bottom in the dollar. Now, of course, if it is strong, like investors anticipate, then yes, we're going to see a much stronger relief and durable relief rally in the US dollar, because next week is a big week, Corey. You and I were talking offline.
Right.
Next week, we've got the Federal Reserve, the
So Kathy,
ECB,
but
and
before we jump over to next week, I know you like to wait and see what happens. Is that what you would recommend the play is? Let's wait, see what direction picks up, and then we'll go from there? Or is there any front running of this?
absolutely. I don't think there's any front running of this. The only front running is that tomorrow there's also Canadian inflation data, and that's almost, I wouldn't say guaranteed, but like it's a very strong case for lower inflation in Canada. So if you want to front run something, maybe you want to sell Canadian dollars against something else like the euro. But in terms of the retail sales report, there's no front running because we don't know. Because on the
Just
one
too
hand,
unknown.
yeah, because retailers have been warning about weaker earnings, but auto sales, which is a big component of it, is going to be very strong. Gas prices, unfortunately, is going to pull back a little bit.
Hmm.
Earnings have been good overall. It's all this mixture. Earnings have been good, but overall job growth is slowing. So there's not enough consistency in what I call the leading indicators for non-farm payrolls. Sorry, not leading indicators for retail sales for us to really front run the trade. Sometimes we can front run, but there's not enough consistency. So
Got it.
yes, I advocate, and that's what I was trying to say, which is that it's very tempting to pick a bottom if you're a pure chart reader right now, and you're seeing that you're seeing the dollar start to show signs of a bottom. You're seeing this good Empire State Survey, but all of this is happening because people are taking profits, squaring up ahead of this really big number. So you gotta wait. You gotta wait till 8:30 a.m. New York time tomorrow. See what that number comes out at, and there'll be plenty of opportunity because that move that we get will probably be a move that lasts for the rest of the week. So there's no need to front run it. And also, you could be wrong. You could
Sure.
you could
Right, of
have a
course.
view on something, and because there's not enough consistency, you could be wrong, and such a big number that it will almost surely stop you out if you're wrong. And so definitely wait on this one, and don't mistake consolidation and profit taking for a real bottom here.
What does mixed data look like? Let's say the report comes out mixed. Do we more consolidation? Do we go lower? Do we go higher?
Well, the thing is, okay, so what constitutes mixed data, right? That would be if like the monthly number was stronger, but the year over year number was weaker, or retail sale has a headline number and then the X autos component. So if they kind of move in opposite directions, then there definitely is confusion. And I think in that case, depending upon, as long as it's not a huge like deviance and it's not a big surprise in one way or the other, I think that investors will still end up bidding up the dollar because
Hmm.
as I said, next week we've got the FOMC meeting, and the
Right.
market's completely discounted a rate hike by the Fed. So they think the Fed's going to raise interest rates, and they're betting on it. So as long as the number isn't terrible, especially after this Empire State Survey, the case is still there for the Fed to raise interest rates. So investors will be wanting to position for that because it's not. So it's kind of like, I wouldn't say it's all clear, but it's not a barrier and not something that's going to cause the Federal Reserve to second guess their
Right.
plans for raising interest rates.
What
So I
is our
do.
current probability on the Fed funds rate? The CME Fed
Let's
Watch
take a
tool?
look. Let's take a look. And for those of you that are on Twitter Spaces, sorry, I'm just looking to see what I want to share. I want to share my
Yeah, of
window.
course.
No, I want to share my screen. Um, okay, so for those of you that are in Twitter Spaces, please go to the YouTube link because I'll be sharing my charts. I'm showing you how to get to the CME Fed Watch tool. So if you hit the CME Fed Watch tool here, and sorry, my husband is bugging the hell out of me. Let me mute him. Hold on, I gotta mute him. Okay. So, okay, CME Fed Watch tool here, and you can see, look at this,
Wow.
97.3% chance of a
Is that
rate
the
hike
highest we've seen in this series?
that we've seen for a while. Yeah, I mean, we
Yeah.
look at this every week, and even when we got to the last rate hike, the odds were not this high. So
Right.
yes, 97.3% chance of a rate hike next week, and that's just for curiosity purposes. September, because remember the Fed was signaling two more hikes.
Hmm.
So this is where we're at right now. So there's an 84% chance that's just going to stay at 5.25, and only a 13% chance that it's going to get another rate hike in September. And then in November, that odds increases a little. So they're thinking maybe the Fed could pause in September and then maybe raise interest rates again in November. And that's pretty much it. So there's like a 28% chance of another rate hike in November, and then nothing really expected for September, and then that 97% chance that we're looking at next week. And that's why, looking at these things are really important because, and that's a really good question that you asked, Corey, which is, if the number's mixed, which way will it lean? And as long as it's not terrible, it still should be a green light for the Fed to raise interest rates, and the market's already betting on that. So given how much the US dollar's fallen, the weakness of the dollar is not consistent with the market's expectations, the Fed funds expectations for a rate hike. So if you think the Fed's going to raise interest rates, the dollar should be trading higher. So, that's what we'll see here.
Perfect.
So that's the main focus that we have this week, and from the U.S. But we also have consumer spending reports from Canada and the U.K. We also have inflation reports from Canada and the U.K. So I think the Canadian dollar as well as the British pound are very much in play. A lot of our BK members have been asking about whether it's finally a bottom in dollar CAD. So let's take a look at that. So
yeah, please.
Dollar CAD, okay, my chart is showing, that's good. Once again, everyone's very tempted to pick tops and bottoms right now. And you can see, dollar CAD, which is really, the dollar CAD price action is kind of interesting because dollar CAD never rebounded and never rallied. The US dollar never rallied against the Canadian dollar after the Empire State, even though it rallied against the yen, the euro, and the other major currencies. So it just kind of shows the resilience of the Canadian dollar. So while it's extraordinarily tempting to pick a bottom in dollar CAD, you can see, first and foremost, it's still below all of the major moving averages, and it's still rejecting the 20 SMA. I love moving averages, and these moving averages serve as very important support and resistance levels. And I'm just going to switch over to my zip charts to show you what it looks like on an intraday basis. So on an intraday basis, just ignore okay. So here you can see that so basically this is my zip charts, and what it tells you is that when the background is green, we're in an uptrend. When the background is red, we're in a downtrend. And where the instrument is trading in relation to the indicator line is also very important. So for example, when we have the currency pair like dollar CAD rise above the indicator line, the background turns bullish. So you can see here at some point today, prior to the Empire State, dollar CAD looked like it was in buy mode and was really tempting to buy dollar CAD. But the number came out and the momentum completely shifted to bearish. So right now here, because there's no trade, because the background which reflects the long-term trend is bearish. And while we're above the indicator line, which suggests the short-term trend is bullish, you really need to make sure that you have consistency where the background is green and you also have the instrument above the indicator line. That's when you get the most powerful setups. Like we were yesterday, or last night during the Asia session, we went long Euro Aussie. Sorry, let me get rid of all this stuff. We went long Euro Aussie at the Asia Open. And for those of you that didn't watch other live streams, I talked about how I trade the Asia Open and the New York Open. So this is Asia Open, 8 p.m. New York time. Consolidation, we're above the indicator line. Now, I fuse fundamentals with technicals. Fundamentals are always a component of my trade. And in this specific case, Chinese GDP numbers were coming out later that night. Not rocket science to imagine that Chinese GDP was going to be softer, because everyone had been talking about how Chinese growth is, falling short of expectations. So I had a view that Chinese GDP numbers were going to be softer. And because I had a view that Chinese GDP numbers were going to be softer, and I also knew that the ECB was uber hawkish, and Euro Aussie was in my zip buy zone, which means that the background's green and is trading above the indicator line at the Asia Open. That was what gave me the confidence to go long Euro Aussie at the Asia Open, and that's what triggered. And the Chinese GDP number is what triggered this rally in Euro Aussie. So that's how you basically look to combine fundamentals with technicals in order to handpick trades. So while tomorrow I strongly believe that Canadian CPI numbers are going to be weaker because the price component of IVPMI was weaker. Until I get confirmation in my charts, I won't be jumping into the trade. And maybe it's not a dollar CAD trade. It could be, like I said, Corey, you asked, where is that clarity? And, maybe it's not a dollar CAD trade. Maybe it's a Euro CAD trade. And you can
Kathy,
see right now,
let me stop you for a second, because you mentioned earlier about front running that trade with the Canadian news coming out tomorrow. So you're saying you would not?
I'm saying that, I would not do it in dollar CAD. I'm saying that maybe
Got
another pair like Euro CAD would be better, because first of all, it would be a really bad idea to do this in dollar CAD when you have such an uncertain number of U.S. retail sales coming out at the same time. So if you want the pure CAD trade, it should be in a cross. It should be in maybe Euro CAD or like Aussie CAD or Kiwi CAD, but but at the same time, we want momentum to shift to the upside. So I'll have to see how it trades during the Asia Open. So for example, if at the Asia Open we've already consolidated a bit and we get a couple of green candles showing that's confirming to hold above the indicator line, then yes, that could be a good opportunity to buy. So it's important, I'm always a believer that you've got to combine fundamentals with technicals. And just because I have a fundamental view doesn't mean that I'm going to jump into the trade. I want to make sure my charts confirm as well. And right now, taking a look at dollar CAD and Euro CAD charts, clearly momentum is not on my side. So there's no confirmation in those trades.
So what away? You wait for more. You're looking for more confluences.
So, I don't trade anyway until the Asia session. So I'm going to wait at 8 o'clock New York time. If I see something like this where we get like consolidation over here and, it shows that it's not breaking below the indicator line, I may go long. If it's dropped itself down here, I'm not going long. If it's dropped itself down here, then went back up there, I might go long. So I'm going to let the charts dictate whether, and really what the charts mean is let sentiment dictate whether it's time to get into the trade.
Got it.
And for those of you that have questions,
well, and your fundamental.
Absolutely. And for those of you on Twitter Spaces, you can hop on, if you want, you can hop on to YouTube and ask questions there as well. Where's the US dollar headed this week? So, we already talked about that. We talked about how. Go ahead.
I wanted to ask you, go ahead.
So, in terms. So, where's the US dollar headed this week? As I said earlier, first of all, dollar yen is in the buy zone of the zip signals. But if we go to the daily chart, let me just get rid of these indicators and lay on the moving averages. You will see that, there's a lot of support and resistance ahead for the dollar. The dollar is deeply oversold, and right now it's rebounding because we had a good Empire State survey, and there's profit taking on short dollar positions ahead of the U.S. retail sales report. So yes, I think that from now until you get the U.S. retail sales report tomorrow at 8:30 New York time, we're probably going to see a bit more of a relief rally in the dollar, particularly against the yen. And very much so, I'm bearish Aussies, I'm bearish Kiwis. So I think we're going to see opportunity for further weakness in Aussie dollar and Kiwi dollar. But then it all rests on the retail sales report. As long as it's not terrible, I think that we should see some additional recovery in the dollar ahead of next week's FOMC meeting. So did you have another question, Corey? If not, I have a question here. Do you have any videos teaching you how to use the trading platform MT4? Yes, we do on our own YouTube channel, which is youtube.com/BK4X. we do have some videos on how to use MT4 there. So you are most certainly welcome. And we have a lot of cool videos there, like how to use sentiment to trade Forex. So you can definitely find that there. Did you have a question, Corey?
No. Bounce that first.
Yeah. So, and feel free to jump onto the YouTube channel if you have any additional questions. So we talked about the Canadian dollar. The British pound is also very much in play, and I'm going to pull up the British pound chart. We have UK inflation as well as UK retail sales data coming out. And I think that, because we don't have a BOE meeting next week, I think that if we get any type of bad news from the UK, we're probably going to end up seeing a deeper correction in the pound dollar, and we'll probably end up seeing a deeper correction in the pound dollar against the euro. So euro pound, I think it's showing signs of a bottom. We're actually trading back above the 20 SMA for the first time since July 3rd. And so I think that has a much more realistic bottom in place, because we have that ECB meeting next week, and because there's a very good chance that the inflation data, which inflation has been easing globally, the inflation data in the UK is probably going to be softer, and so there's a very good chance that the sterling could weaken further. So I really like euro pound to the upside, but I also like pound dollar to the downside.
Got it.
So we have a question about euro dollar. We did look at euro dollar already, and this is pretty remarkable, right? This is 8th straight day of gains in euro dollar. This is the longest one-way move that we've seen in euro dollar in a very, very long time. So obviously the question is, where's resistance? And resistance is pretty much right here, right? Resistance is a reason why.
Resistance. What's driving that move?
So it's two things. One, it is the overall weakness, and primarily it's the overall weakness in the US dollar. A lot of times euro dollar is just perceived as the anti-US dollar. And so it would not have been this strong if the US dollar wasn't falling. And then secondly, though, the ECB, the market's priced in 2 rate hikes for the ECB versus that 1 rate hike that we just looked at, Corey, for the Federal Reserve. So that ongoing hawkishness by the ECB is one of the main reasons why eurodollar has been rallying. But on the daily charts, we just saw how it's finding resistance, and the move is showing signs of exhaustion, even though it doesn't really want to give up. And we get the reason why on the monthly chart, which is that we have the 100-month simple moving average right at 112.50. And I'm just curious. I'm not a big user of fibs, but I do recognize their importance. And you can see here, 61.8% fib, right where the 100 SMA is. So pretty much 112.55, 112.75 is a very, very, very strong level of resistance for the euro dollar. So if we get any good news on the retail sales front, that should be where euro starts to pull back.
Got it. Awesome. Kevin, I know Boris isn't here today. Can you? So when with FX,
what's his regulars? I don't know what he's usually looking
at. Oil, Bitcoin, and gold. He usually gives us an outlook on oil, Bitcoin.
Yeah, no problem. Let me just remove the fibs. So oil, oil had a really strong run over the recent weeks, stopped right at the 200 SMA, just illustrating to you the significance of these moving averages. Lots of people poo-poo them and say they're backwards looking and they're not like that, you can't rely on them, but look at this. They're stopping right at these key levels. Anyway, oil's pulling back. First of all, oil had rallied because the dollar had been weakening. Oil is pulling back because the dollar is strengthening. So overall, this is still very much an oil view. Now, of course, we've got this range that we're in, 74, 77.50 in oil. I think that oil is, oil bounced off its lows. I think there's an opportunity to sell oil for a move back towards the 100 SMA and maybe even the 20 SMA. I do think we're seeing, I mean, and even if it does though, Corey, the overall bottom is still in place because the bottom's down here. So even if we pull back down here and you're a buyer here or you're a buyer here, a move down here does not break this move,
Right.
this rally. So I still like it to the upside. Gold, similar story. Gold, but to a slightly different degree because oil you saw had a very overextended move, and gold only rallied a little bit. But gold is pulling back because the greenback is strengthening, and unfortunately, gold has really been a laggard. I don't think that investors right now see the need for diversification into gold, as they see more yield return opportunities on other assets. So I don't see any significant moves in gold, but I think it's important to realize that this is, this is a triangle breakout and it's still holding. I'm just going to draw this for you.
Yeah, please.
I'm going to hide these moving averages so we're not distracted. So clear, this is not perfectly drawn, but clear breakout of a triangle. And, this is a typical pullback. Pullback should take it down to about 1940. If it holds 1940, then, the uptrend is still intact for a further recovery. So in the near term, I think I expect a further pullback in gold, but not a deep one at all. I think that it's still a buy on dips. And then Bitcoin's also pulled back. We were looking at this with our BK members. I'm missing a letter here. Bitcoin. All right. So Bitcoin also pulled back. For now, Bitcoin is still, holding this breakout point here. This is a very significant level in Bitcoin over here, which is these former spike highs, these former spike lows. We love to look at swing highs, swing lows. And of course, they're roughly drawn, but pretty much right around the same levels. So this is important. If Bitcoin breaks 29,600 or even 29, I would say 700, we're going to see a much deeper correction in Bitcoin. But for the time being, this should be seen as it's a kind of a low risk buy trade where, you basically could go long here with a stop somewhere in this region here. And, maybe you have caught it at a bargain, but, if it does break below here, then it does definitely seem a lot more room to the downside on that front.
Right. Very good.
Yeah. So that's what we're basically looking forward to for this coming week.
Awesome. And Kathy, I'd love to see your heat map if you would.
Yeah, certainly. So this is the heat map. And you'll notice that this is slightly different from what we just talked about, where, my view is still, my general long-term view is still bearish US dollars. But I do believe, and because, I personally think that there's downside risk to the US retail sales report. So I would be cautious about buying dollars into US retail sales, but we may change this outlook if the US retail sales number is not terrible. I am bullish euros. That's consistent with what we talked about. I really like euros to the upside, particularly against the crosses. I'm neutral bearish sterling. I think that that's going to be vulnerable to a correction. We're neutral Aussie simply because we have the jobs number this week, but I'm actually neutral bearish Aussie because the PMIs from Australia have been very weak. And with manufacturing and service sector activity slowing, and basically the PMIs telling us that companies are hiring less, that I think Aussie is vulnerable to further corrections. I'm definitely flatly neutral CAD because retail sales should be stronger given the robust labor market numbers we've had, but at the same time, the inflation data should probably be softer. I like selling Kiwis. I like selling Swiss francs. I like selling Japanese yen in the near term because I think that that in the very near term, there's no major threat to the stock market rally. And that's something that everyone's watching because with stocks at record highs, how much further can it go? And that's all contingent on data. So we like to say that the Swiss franc and the Japanese yen are are basically measures of risk appetite. So when stocks perform well, the Swiss franc and the Japanese yen tend to underperform. And when stocks perform poorly, the Swiss franc and the Japanese yen tend to outperform. So stocks are doing well now, and the trend in stocks is very much intact, especially after the Empire State Survey. So for the time being, you have to remain bearish Swiss francs and the Japanese yen.
Got it. Well stated.
So, we're in a mode right now, Corey, that I just want to just talk about this briefly. We're in a mode, Corey, where everyone is very much tempted to pick tops or bottoms. And one of the things that that we talked about already is that one of the mistakes that people make when attempting to pick a top or bottom is mistaking consolidation for a reversal. And
Right.
that's very important right now because the reason why we're seeing the relief rallies and the reason why we're seeing what looks like a bottom is because there's profit taking and consolidation ahead of a very, very, very big number, the U.S. retail sales report. But there are other things that I think are very important when it comes to picking tops or bottoms. Number one, it's very rare for you to pick the ultimate top or ultimate
Sure.
bottom.
Right.
So therefore, you want to make sure that you're not trading too large, because if your size is too large, what could end up happening is that if you don't actually pick the true top or bottom and your stops are at the wrong place, you could end up being stopped out very quickly. So when you're picking top or bottom, you want to make sure that the initial trade that you take is a more modest one. And then if you're right, you want to add to winners, not add to losers. That is another mistake that people make when they're picking tops and bottoms, is that they're adding to the losers because they're hoping that if this wasn't the bottom, then the next price level should be the bottom. But the much smarter thing to do is to have a smaller initial position and add to the winners. Once it's proven that the bottom is really in place, add to those trades, because when you have oversold, overbought currencies, when there's a reversal, it can be very strong. Also, be
Kathy,
mindful.
I feel like you can make a whole YouTube tops and bottoms. Do you have one?
I do, but actually my latest video, I'll show you, like our channel is YouTube BK Forex, is exactly what I'm kind of sharing with you. It's 5 mistakes to avoid when picking tops or bottoms.
Oh, awesome.
So
Awesome.
it's, and for those of you that want to trade gold, a really popular video, 8,000 views on top tips for trading gold. Lots of really great stuff here. YouTube.com/BK Forex. So
Excellent.
so when we just looked at the chart, Corey, of Bitcoin. We talked about how, was it Bitcoin? Yeah. About how,
Yes.
these spikes are never the perfect levels at the same levels. And that's why when you put a stop, you can't just put it right. Like, let's say you were over here, and you put your stop right below here. That's the wrong place. You need to when you're picking tops or bottoms, you need to give yourself wiggle room, because it's never at that precise point. So another mistake that a lot of traders make is that they try to pick, this ultimate level, and they don't give themselves enough wiggle room, because dealers like to, regardless of what instrument, Bitcoin, currency, stocks, dealers like to test some of the key levels and take out some of those stops before they allow the trade to reverse. So make sure you give yourself wiggle room. And then
Do you have a rule of thumb for that, or is it more of a feeling?
Well, with currencies, usually it's about 20 pips or so, I think is good. And then lastly, accept when you're wrong, and refusing to be wrong and refusing to accept that you're wrong is probably the biggest mistake that, a lot of people make, because sometimes you're just wrong. Usually these trends are in place for a very good reason, a very good, strong, fundamental reason. So if you're wrong, and your stops are hit, then move on to the next trade or wait for the next setup. For me, I wait for the zip setups, which already have the longer and shorter term trends embedded in them, and tells me if the longer and shorter term trends have bottomed out. And that's when I will pick a top or bottom. But those of you can use your own indicators as well.
Mm-hmm. Excellent. So Kathy, I again thank you so much for joining us. And would you give us just a quick roundup this week and next week, what we're looking out for, and just a summary of the opportunities that should be coming up?
Yeah, but if you don't mind, Corey, we seem to have a lot of questions.
Yeah, yeah,
Uh,
let's do it. That's great.
so here's
Love the
one.
interaction.
Can you explain? So the whole bunch of questions on gold, which we just talked about, and then can you explain why soft Chinese GDP boosted the euro? Well, soft Chinese GDP is really a it really damages the Asian currencies. So, like the Australian dollar, the New Zealand dollar, and yes, it should have been bearish for the euro, but I think that investors are very much focused on next week's ECB meeting, that they're overlooking that, and they're also looking at the weaker Chinese GDP numbers as worse for Aussie and Kiwi, so they're buying Euro Aussie and also buying Euro Kiwi. And then the other question is, or two more questions. One thing I've never heard any analysts explain is how's the labor market influence the Federal Reserve's decision on interest rates? Well, that's a very good question, and it's true for every central bank. That's why the Canadian retail sales report, the UK retail sales report is important. So, with a central bank, the most important thing is growth, right? At the end of the day, it's all about growth, whether the economy is growing faster or growing slower. And the GDP formula has consumption as a very big component of it. It's not rocket science. If you think about it, consumer spending drives growth and it drives economic activity. And I read this funny headline that said that the Taylor Swift Eras concert was
I
such
saw
a
that.
yeah, it was so popular that's actually been a big boon for the, or not big boon, but it's contributive and positively to the U.S. economic growth.
That's
So because
wild that they can measure that in economic.
yeah,
It's crazy.
well, so far it's only been a U.S. tour, and it's already expected to be $1 billion tour. So that's spending on the tickets, on the concessions, on everything that's related to it,
Right.
is consumption, and is spending, is retail sales, and that contributes to growth. Which if the economy is growing, the central bank has more leeway to continue raising interest rates. Also, if the economy is growing, there's a greater upside risk to inflation, which is and for inflation to stay high. If consumer spending is falling, that is negative for growth, and it actually encourages retailers maybe cut prices, right, in order to boost demand, which helps to keep inflation lower and reduces the pressure on central banks to raise interest rates further. So it's a very, very important piece of the puzzle. And then, does big NFP numbers increase the chance of a rate hike? Yeah, because you won't be feeling free about spending if you don't have a secure job or a job at all. So
Right.
absolutely,
Of course.
you need to make sure that if the labor market is strong, you feel confident that your job is still going to be here tomorrow, and that or that you'll be able to get a job easily. You're gonna be more willing to spend. If you see all your friends being laid off and you start getting worried about your own job, then you're probably not going to be as willing to spend. So that's a very key component, not just for the U.S., but same thing for Australia, New Zealand, and other countries. And then, hi Kathy, how does PMI affect inflation numbers? A lot of really great questions, Corey. I love it. So PMIs.
We've been waiting to.
I know. And what I really love is, how much people realize the importance of fundamentals in trading.
Absolutely.
PMIs are a reflection of how the manufacturing and service sectors are doing. Also, PMIs are some of the first reports that a country releases for the upcoming month. So, it comes like PMIs, and then the employment reports, and then the inflation reports, and then the retail sales reports. So the PMIs and the ISMs give us the first look at how economy is doing. So from that perspective, it's from its frequency, it is more market moving than the other reports. But it's also important because it's a true reflection of how the manufacturing. I mean, the economies are driven by manufacturing and services, and mostly services. So the PMIs tell us how manufacturing and services are doing. And inside the PMIs and the ISMs are like inflation indexes. And so they give us a clue as to how the inflation reports could fare. So that is why the PMIs for the UK and Canada both confirm that inflationary pressures in the UK in the manufacturing and service sector levels are easing, and that's why there's a very good chance that tomorrow number from Canada is going to be softer. Okay, so I think
Right.
that's all of our questions, Corey. I'm sorry you had asked me a question before.
Yes, I did. I did. I love a quick summary from you. It's ready. What do we have this week to watch out for? What do we have next week? I know next week's a big week. And what should we be
Yes.
looking out for? And what maybe a play or two that people could actually, actionable event for us.
Okay, so number one, front and center, is going to be tomorrow's U.S. retail sales report. That's going to dictate how the dollar trades for the rest of the week. And that's hands down the most important report from the U.S. We also have Philly Fed, which is probably going to be stronger because the Empire was better. We also have housing market numbers, which probably won't be all that terrible. But really, it's all about the U.S. retail sales report. Aside from that, we have a whole bunch of inflation numbers from the UK, from New Zealand, from the final inflation numbers from the Eurozone, and from Canada. Those will probably all be softer, and it kind of reinforces the little tops that you're already seeing in those currencies.
Right.
And then we also have the jobs report from Australia, which is very, very important. And I think that's going to end up being softer. The only trouble with that one is that the market already thinks it's going to be soft. So the bar is very low. And then we have spending reports from the UK and Canada to round out the week. And all of this is in the lead up to next week, which is going to be the three big rate decisions from the Federal Reserve, the ECB, as well as the Bank of Japan, who could very well make the first change in policy in a very long time. So some people are saying that meeting is even more important than the Fed and the ECB because they haven't changed policy in a very long time.
Kathy, what are the expectations for ECB? I know they
Rate
surprised last time.
Yeah, a rate hike is fully priced in. Yeah, rate hike is fully priced in. So really, it's about guidance, right? So a rate hike is fully priced in, and another rate hike is fully priced in. So the market is looking for confirmation that they're going to get another hike in the fall. The Fed, we saw, only one rate hike is priced in. So that guidance will be even more important because what happens next? Are they done? Is the Fed going to tell us they're near the end, or are they say that that the members still believe that there's going to be another hike? So that guidance part is going to be really, really telling. But we'll be here again to talk about it next Monday.
Yeah, absolutely,
all
absolutely.
Of it happens.
Awesome.
Yeah.
Kathy, thank you so much for your generous time and giving us the good guidance on all these things. And we're looking for a productive week. I hope yours is as well, back from vacation. And again,
thank you so much. Have a great week, guys.